The markets are following the situation in Greece closely as the latest round of talks between Greek and European Union finance officials broke down on Monday as neither side could come to terms on a deal to push the embattled country forward. So what does this mean for the markets? I'm joined on set by Kevin Kelly, Chief Investment Officer of Recon Capital Partners. And Kevin, it's good to have you here. Welcome back.
Thanks for having me.
So how important is Greece for the markets? Are investors just watching this closely because there's simply nothing else to worry about?
I think the main focus is what came out of earnings. Earnings growth really isn't expected to take off this year, especially in the U.S. China's slowing down. But the real thing that's happening in Europe is Germany is growing. So if you look, the forecast is 1.5% for the rest of the year. So Greece is really a topic. It's going to be hardline until the end of this month. But both sides are talking, and neither side wants to leave, especially Greece, because then they would have to go and get harder lenders, maybe China, to lend to them outside of European Union.
So you think a deal will be reached?
Yeah, I think a deal will be reached, and you can see even today the talk was over two words that they may need some flexibility, and Greece took a hardline stance. So they're going to saber rattle for a while, but a deal should be reached.
All right, so we'll be watching that, but let's talk more about oil. Oil prices reaching the $53 handle. So how will oil change the markets over the next month or so?
So oil shouldn't really impact the market significantly. The consumers are really feeling the benefit. Going up to 53 isn't going to impact gasoline as much as people are anticipating. So the consumer sentiment is still going to remain high.
All right, and let's also talk about the Fed. We're getting the minutes tomorrow. Do you think there'll be any clues in terms of when the central bank will raise rates?
Yeah, I think the central bank really needs to be firm and signal confidence to the marketplace and really actually increase, even if it's marginally 25 basis points. That's what the market's expecting. We can't stay here at near zero levels forever, so everybody's going to really want the Fed to do something by June.
And do you think that could topple markets once they do make that move?
No, I don't think it should topple markets. I think it'll lend credence to what's happening in the U.S. And the U.S. is growing. The numbers are good. So we can't have this zero interest rate policy forever. And the numbers are indicating that. If you look at the job market, it's doing really well. Labor growth is starting to happen. So the Fed really needs to start signaling to the market that the U.S. is strong.
And of course, if they did raise rates, that would be sort of the best indicator that actually the U.S. economy is doing well.
Yeah, it's gonna signal to the markets that it's strong in the economy, and you can see that happening with corporations and the growth that should happen throughout the second half of this year.
All right, Kevin Kelly, Chief Investment Officer of Recon Capital Partners. Thanks for coming back.
Thanks for having me.
I'm Scott Gamm, and you're watching The Street.